Are you panicking yet? Yo. Welcome back to the channel. Oh man. If you've been following me on Twitter, if you were following me on Twitter overnight, I actually thought that it was quite possible that you would see a little bit of a bounce up in futures. And I think I even mentioned in the video yesterday that it was possible that you would see like a weak rally going into the weekend, maybe even in futures overnight. And yeah, Composite Man, he said, we don't really need to do that. It's obvious that this is distribution. And we're going to come back here and do some tests of the lower levels again, as we've been talking about happening on the channel. And here you're pressing even lower, breaking down below your 36.55 level. So let's take a look here and see. And I mean, this is I'm going to show you. I'm going to make a video here to explain. Let's just see where we are Fibonacci wise. I'm going to tell you right now. You got to reclaim this 36.57 for there to be the possibility of another little relief bounce here. You should get a little bit of a bounce. I would be surprised if you didn't. But perhaps you just crash right through, because if you fail this, you got to go down and test your 707. And it would make sense for him to leave us off here on a 707 going into the weekend, perhaps. And then everybody's riding their puts into the sunset while he does a little liquidity grab up to here. We'll see what we think about that. Not much structure here except for straight down lines. Okay, let's go through the list of reasons why you should not have been in a leveraged long position going into this trading session. Because there was the risk was very obviously for the long side, especially if you've been watching this channel. That should have been very clear to you that the riskier side, the riskier position to take would have been the long side, okay? So let me make sure that we have a numerous amount of confirmation here that we've been talking about on the channel. So let me just lay it all out here and make it clear for everyone who's viewing at home. And maybe I'll make a bigger point to share this on Twitter, because apparently some people on Twitter have no idea what I talk about here. So they see my tweets where I say, hey, there could be a bullish rally, and perhaps they're taking them out of context for the broader view, okay? First, we have been annoyingly talking at this point, ad nauseum, talking about this purple midline, okay? Chop zone, whatever you want to call it. Multiple times you've seen S&P get supported and resisted by this midline over the course of this bear trend that we've been in, right? I was saying from the time that we broke this accumulation range that the major place that you're going to see resistance is at this midline. That's going to be the decision point. If you break through the midline and you hold it as support, then you're bullish. If you don't, you're bearish, okay? What did we do? We came up, we tested the midline perfectly, failed it multiple times, and we have since gotten rejected down. Now, it's semantics, okay? At that point, it's semantics to suggest that if I'm talking about a bull rally, right, a relief rally at any point, that I'm suggesting that you should be longing the market, okay? That's insanity, okay? Crazy. I'm just setting expectation for short-term moves. The macro was very clear going into today, okay? All right, point number 2. I'm really not that aggravated, but I'm just trying to make the point very clear here that when I'm talking about it, that's why if you follow me on Twitter only, like this is it's way more important to be listening to me on the YouTube videos to understand my sentiment, okay? And I know everybody doesn't have the time for that, whatever, I get it. But I'm just trying to make it clear, okay? Another thing that was going on here, guys, you have this crazy unsustainable uptrend here, okay? If you maintain this uptrend for the rest of time, by the end of the month, SPX would have been up at $46.58, $4,700. That's not happening. I like the U.S. economy just as much as the next guy, but no, okay? When you broke here, this confirms distribution, Another confirmation point for distribution. Okay. Also, we talked about it yesterday. You got cleanly rejected by the 707 fib at the midline. When you pull from the top here to the bottom here, a clear rejection at this apex. Gorgeous. How many times have I talked about the 707 fib on Twitter, on YouTube? I mean, nauseum, right? Extremely annoying, if you ask me. There's certain people that I respect that I said, I tweeted and said, look, like, if you just because I'm calling for a little like short-term rally in this distribution, like an LPSY, and we're going to talk about the structure for Wyckoff here on a shorter time frame. But if you think that me calling for perhaps one of these sorts of rallies, right, this little poke up here, if you think that me calling for that is me being bullish on the market in general, when you combine my sentiment from YouTube as well as my sentiment from Twitter overall in this entire rally, right, since we crossed 3750, I said this is where we were going to get most likely rejected at, right? I mean, it's just unreasonable in this one, I have a reply. It's like, oh yeah, you definitely were net long. You just saying that you were hedged or something like that. Like, dude, the long was the hedge. that was the little hedge, not the primary. Okay. Let me just correct this right. Okay, so. And we haven't talked about Wyckoff structure in a while on the channel, so this is a good time to bring it up. But and I don't talk about I don't really detail out the elements in this way anymore because I kind of naturally see them on the chart. And let me know if it would be a good idea for me to start to detail them out in this way. And we can talk about these elements more specifically. But I kind of got away from it just because I got so used to seeing it and being able to identify them that I guess and it's a little bit easier to communicate trend lines and things like that on a day-to-day basis when it comes to YouTube videos. I'm sure you understand because lines are pretty easy to look at, and then when you'd be like, look, if you go below here, that's bad. If you stay above, it's good. But anyway, let's bring the schematic over here. All right, so this is about as textbook as it could get here. Again, you had a low volume rally up here, okay? First of all, that's the first signal. Let's throw that unsustainable bull trend up, okay? Unsustainable bull trend. The bull trend that says that by the end of the month we'd be at like $5,000 on SPX. Hold on, let me pull it back here so that it's. Oh my goodness. This chart looks kind of cool. I've never seen it. This is my first time adding an image to a chart. I like this feature. Keep it up, TradingView. And I give you guys a lot of crap, but this is neat. I like it. All right. Sorry. I know there's a better way to do this. I could click like auto or something like that. I know that's going to be in the comments. I'm sorry. Okay. I'm an old school guy. I'm used to using my phone. All right. So let's talk about it. So. And the volume's a little wonky. It's a little bit harder to tell here, but you had a buying climax back here on October 4th. Very clearly, the biggest spike in buying volume occurred on this day, right? You had an automatic reaction to this buying climax where you retested the primary supply, okay? The primary supply basically is the end of the markup phase where you start to see slight weakness in the market right before the buying climax, okay? So at this point, this is a signal that a liquidity test is likely, okay? You have that liquidity test occur, and then you have a reaction down before you have another sell test up here, okay? And the sell test on the schematic is actually below the buying climax, but the key thing to note is that the goal here is actually to test liquidity and see if you can continue to mark up or not. Here, the market decided that this was the climactic event, which is where you saw a sign of weakness in phase B, okay? This sign of weakness is where we decided on the channel, right, that the most likely scenario that this was going to play out as distribution. From there, you had a big play up. You tested and remember, at this point, at this point, we're already seeing this rounding off, this weakening upside price action. If you go back to the video from October 4th, you'll hear me talk about it. You have this sign of weakness come in, okay? Then you come up for an up thrust in phase B. You have a low volume, multiple tests of this midline before ultimately being rejected. And you can make an argument that this would be a sign of weakness, right? But for the purposes of this, it kind of just looks like actually this is kind of this sort of middling reaccumulation that occurs. And then you had an LPSY, which is the last point of supply. So basically, the up thrust fundamentally is meant to be, I'm going to slow down here, okay, so that you guys understand what I'm saying. Sign of weakness is where you broke this liquidity zone that was created by this automatic reaction, okay? When you broke here, you broke the existing trading range, that's a sign of weakness, okay? And then you had a weak up thrust. An up thrust is a low volume push to the upside, and it's an effort to cause slow distribution so that the volume is relatively low, the price is high. Retail in their head is going, wow, price is relatively high here. Perhaps it's a good time to long. The market maker is keeping price high so that he can keep retail interest high and slowly distribute his shares out. That's why the volume is lower, because he's not trying to sell everything at once. He's trying to keep the price up there for a longer amount of time, okay? Then you sell back down. You break this trend. You come up for a last point of supply, which is basically the same idea as the up thrust. All he's doing is buying that bottom out so that he can cause an up thrust in price again, so that then he can dump. The LPSYs, the last point of supplies, are typically shorter in duration than up thrusts, okay? Up thrusts, they hold the price up there. Now we're to the point where, hey, we're pretty much ready to offload the rest of our shares here. LPSY. So you cause a price spike, you sell off. Cause a price spike, sell off, right? Then you had your sign of weakness here that was in phase D, okay, which is where you broke through the bottom of the trading range for the final time, which is the signal like, hey, it's happening. We're distributing. And you can just see that this structure is so distributive. It's so inherently distributive, okay? I mean, it's very obviously distributive. At no point were we thinking. And now, look, if you break the uptrend and then you have a reaccumulation, okay? So let me show you what that would look like. If you break here, just for example, and then you start to round out and create like a bottom, then yes, and you break above this level again, you confirm above 38.90 or so, wherever that top out happens, then you can say, yes, we'll see bullish continuation, right? And you want to see this rounding out sort of look like you saw back here. Rounded bottom, okay? This is the sort of look that you're looking for, okay? This is the sort of look that you're looking for in the market. You're not this is so, I mean, this is not there's so many times I just didn't want to throw shade on anybody, but I was seeing content out there that was, yeah, we're bullish, and I'm just looking at this midline reaction and I'm just going, I mean, imagine longing this. Like, this is like we're coming to retest. We're testing this back here. This is what's happening, okay? Right? You're trading this golden pocket right now. Literally right now you're getting a bounce in this golden pocket. We're going to 36.43, okay? I can tell you with, I mean, look, not financial advice, but it's probably happening, okay? Maybe you bounce at 36.94 before you do it, okay? Maybe you bounce at 37.23 before you do it. These are the scenarios that can play out. I did say yesterday, look, I'll admit, I said yesterday I'd be surprised if you crashed today, because I didn't think that on an expiry day they would want to push price down so hard. But that's what they did, okay? Do you think that based on that I loaded up calls? No, I was expecting it to go sideways. I don't want to be in calls. Not calls. Calls? No, especially not short term. Anyway, I'm not trying to be a butthole, but like, dude, it's just like sometimes I'm like, do I need to do a better job of being more universal in my communication? Like, do I need to like, how do I get this message across so that it's very clear, like what my understanding of the market is, like what I'm seeing in the market? Because I don't know. Sometimes it's frustrating. But yeah, so that's pretty much it. That's video. Now, so I did share a tweet. Let's talk about that. So if we go to the daily chart, you kind of lose a lot of the structural elements are a little bit harder to see when you look at the daily chart. But I can show you on longer time frames here potentially that it is there is a potential here for a bullish outcome, and we'll discuss that. And what that would be, maybe it would be better on the 4 hour here. Sorry. What that would be is that this actually was a sell climax back here from a more macro perspective. This was an automatic reaction to that sell climax. This was a sell test, okay? And that this is actually a phase B distribution, right? And so if this is a phase B distribution within an accumulation, what you could see is another break of this trading range before an accumulation occurs, and then that would act as a spring action below this trading range, okay? Right? So this actually becomes your an accumulation range. Now, this is a little bit more long time frame sort of bullish price action, and after that spring, you would have a series of liquidity tests of last points of support, similar to the LPSY. These are faster moving actions, but this could be a bullish scenario that plays out. Alternatively, but less likely in my opinion, is that this actually is a backup LPS, which is the final phase, right? So you now had a sign of strength, which I don't think this is a sign of strength because this actually was a pretty weak rally in my opinion, volume-wise. You would want to see more volume on a rally here if you were to be actually breaking a trading range for a sign of strength and then having a backup phase before you have a markup. But it is possible that this plays out in this manner, that you have a backup last point of support, but I do think that that's the less likely scenario. So overall, again, I am still net bearish. Okay, I think that obviously a relief rally is always in the cards, but my overwhelming conviction is that, you know, and even I mean next week, right? I mean you could have a rally next week, right? But the end result probably will be at least a lower low here. And if not, then this even plays out as a more macro distribution and you have this sort of result. Okay? Hopefully that was good. Good illustration of the way that I am viewing and seeing the market and how you could have, the multitude of ways that you could have seen. Look, I mean, I'm just going to be frank here. The setup was not calling for a break of the midline. Like, it screamed weakness. It screamed weakness up here. The entire time it was up here, it was saying, the price action was telling you, everything was pointing to, hey, we need to retrace, right? And now, you know, you're seeing that retracement. You're getting a little bounce in your golden pocket here. If you fail 36.42, then the continuation downward is the most likely scenario in the short term, and that's what I think is most likely to happen, if I'm being quite honest with you. So, but we'll see. We'll see how it reacts at 36.42. You'll probably close out the week there, or around there, and then everybody's going to be psychologically fried, real maybe confused or something. I don't even really know anymore. I'm reading Twitter, and I understand where it comes from, because I'm reading Twitter, and I will say that, like, you see the sentiment shift but you don't see it shifting, you know? You just see the shift when it's already done. So I do understand where that sort of frustration is coming from, but you know, all I can say is like just watch the videos. You know, this is it's not trading. This isn't about. I don't want to teach people to trade. That's not what I'm trying to do. I'm trying to teach people to understand price action in the market. So I'm just trying to make sure that I'm being like grounded and unbiased and viewing the market through a lens of, you know, hey, and yeah, I'm not always right. I'm not. But on this one, there were so many signs. I was just like, there's no way. There's no way that the result of this test here is a bull rally. It is so unlikely. It could happen. So I guess I can't say that there's no way, but like hopefully if you've been watching the videos, you can vouch. Maybe tweet me and let me know so that I can retweet you that it was pretty evident what I was thinking was going to happen over the course of the next, you know, this week to next week. But anyway, all right. You guys have a great day. We'll probably do a Sunday update. Maybe after futures open, we'll see where futures open up at. And then we'll just go from there. And yeah, so until next time, you have a great weekend with your family. Hug a loved one. Tell them this hug's, give them another hug and tell them that one's from me. All right. You can't choose and you can't replace your family. You can't do it. So, all right. You guys have a good weekend. Peace.